Hello everyone and welcome back. It has been a while. Pleased you can join me again. Here's my portfolio update. I owe you an update and this is what happened in my portfolio across October. So basically where I stood at the start of November. Now here is the goal, ideally by 2050. That is the stretch target. Long-term investing, a challenge to myself, a demonstration that anyone can do it, hopefully. I was at 45,000 before the month started. Over the course of the month that actually dropped to 44,000, and you can see how that compares to the targets. Not quite ready to be at the end of this year for the stretch target. This means that over the month I was down about £1,000. You can see that some of that was deposit, which had a positive influence, but performance was down about 1,200 or so across October. A bit of a negative month in October, although subsequently, as I record this in November, it's been a very good month. So hopefully on the next update, we shall see an improved position. That is the run rate that I need. So 9.78% for the 2050. And a big shout out to Patreon supporters. If you want to talk about stocks, discuss investment ideas, join the club, join the community, I very much welcome you. So what did I do in my portfolio in terms of transactions before we get to the performance later in the presentation? And actually no sales. I didn't sell anything in the month, but I did make some purchases. So Terry Smith, my usual monthly purchase of the Fundsmith Equity Fund. I really like how Terry goes about his business, and a shout out to one of my viewers who recommended his book probably a couple of years ago actually. Amazing book, can't recommend it enough. I also added a bit to my S&P 500 holding, a small amount, and the same for the world index as well, because I had a very large cash position. I wanted to make sure that some of that cash actually was invested into the market. It's holding too much cash, kind of when the market's doing well, you're actually missing out on return. And there's a lot of theory that suggests that being fully invested, in fact not theory, there's a lot of evidence that suggests being fully invested or close to fully invested in the market is more optimal than holding large cash positions in the long run. I also added significantly to my Visa position. That was 1% of my portfolio. It's now about 3% of my portfolio. So big addition to Visa. Really like the company, really like potential returns. That's why I added to that company. It's a high quality company. And last but not least, I opened a position in Meta. Well, arguably one of my biggest mistakes of 2022 is not buying a position in that company. But even at the prices which are now significantly recovered, it's still a good return and a better use of money than having it sat in cash. So a position open there, which I may grow in the future. So that's what I did. Now let's have a look at the portfolio. And this is the portfolio structure. So the quality company section growing and growing and growing, now 12,000. I still want that to be about half the portfolio. So a little bit short there, but over time we find the right companies, not overpay for them, and that section will grow. You can see the dividend of the managed is around about the same value. Still got some of those unclassified holdings that don't fit my strategy, but companies I held already when I implemented the strategy. Too much cash, still 9,500 for the value of the portfolio. So again, I'll be looking to make better use of that. My next portfolio update, you see how I've done that because there have been some changes. Now we're on to kind of a more structured view of that. So what you can see here is the quality companies there, just over a quarter, cash, dividend, and so on, just to give you an idea of the proportions of the portfolio. Bit of a reminder, I want that quality section to be towards 50%, dividend and managed to be 20 to 25%, cyclicals to be anywhere from 0 to 10 if the opportunity arises, see 0 in the unclassified, and that cash needs to be much smaller, but I'm not just going to spend that cash, as it were, invest that cash for the sake of it. It's got to be right, it's got to fit the strategy. Now, the bit you've been waiting for, the performance of every holding. And in terms of performance, we start with that quality companies section. Bank OZK, the largest in October, a slightly negative month, but still a good over return on that. I do think that there's a lot more to come from this company. One of our biggest holdings, 4% of the portfolio. Dropbox, not too much of a change within a month. Not something I'd add to. I think at 3%, I'm happy with that, but certainly don't want it to be a bigger proportion, because there are other companies that I'd prefer slightly more. Visa, as mentioned, added to that position at 3%. Google's done very well, although last month a little bit of a pullback, but still, in the short time I've been owning them, 35% up. And Adobe, a good month. Again, owning them for probably about a year or so, already getting towards 40% on them. And then not much change for Williams-Sonoma. Decent month for Elevance in terms of the return change. Unilever's dropped below that 100% mark at 95% now. Skyworks had a very negative month, so that was quite a positive return for me. It's pulled back quite a bit, but it is a company I like. Berkshire has performed well since purchase in 2020. Talked about Meta already. Kelly Partners down a little bit. American Express pretty steady, a company I really like. I need to work out what the point is when I add more to that position. In Mode, of course, due to the terrorist attack, it's an Israeli company, that certainly didn't help its view in the market. But also, they came out with some guidance that, on the face of it, was slightly negative. Market took it much worse than that. I don't think it's as bad as the market reacted, but really bad month, down 39% in October. And then Somero level as we start November. So onto the dividend companies now. So that's about a fifth of the portfolio. Unum, biggest holding in the portfolio, 2,700. It's 6% of the portfolio. It's had a great return in the 3.5 years I've owned them. Steady month for Viva, and also Legal & General down a little bit, but those two are kind of mainstays of the dividend section in the portfolio. Investec, yeah, I mean 17% down is quite a lot in a month, but then it's 250% up, so we can forgive that. British American Tobacco pretty steady. Bancorp the same, probably one of those that I want to get rid of pretty soon. BT pretty steady. Same again here. Negative month for City of London Investment Group. Plus 500 actually had an okay month. Duke Royalty down 10%. And Direct Line down a little bit as well. Managed by others, this is a bit of protection for me. So if I do badly on my picks, I still don't completely lose face because I've got these mainly indexes and a couple of very high quality managed funds, which Fundsmith there is the foremost at 4% of the portfolio. FTSE 100, pretty boring. Then Train has done well, around about that 100% mark. US index. Bad month on the smaller companies front in the UK. You can see reflected here as well. And also the S&P 500, which was down 9 points in that month. Or rather, I should say, my return was down 9 points. World index was down a bit as well. And then we get to the Australia index. So that concludes that section. So we get to the companies that no longer fit my strategy. Alibaba was down a touch. I still think it is a company that should be valuable higher in the market, but then yeah, it's there's a China factor, the economy there as well, and it doesn't fit the strategy. So I'm still in two minds on that one. Corsair, good quality products, market leader in some areas, but not a good return to my portfolio to date. And a couple of really bad investments at the end here. We don't hide, we show. I show all of these negative ones because it is part of the learning process. And then cyclical companies, the fun ones. So down, actually sounds bad, down 97%, but still up full 70. And then just wait till you see what happens on this one when we get to the end of November update in a few weeks' time. Still, overall, we made a lot of money off this company. Overall position, though, is a lot smaller than it was originally. So I've taken some profit off the table on this cyclical. Same on Ramico, really good month there, 300% up. That was pretty level for Intel in the month. Interestingly, Bitcoin, one of the best performers, up 23% in months. So the total return now is getting back towards that level. And the same for Ethereum. To get to it, we've got Altasource. And that concludes the update this month. Stay tuned for the update next month. Thanks for staying with me, and I'll catch you on the next one.